because it is about this time of the year when a number of investors start to look or anticipate the year-end rally. But with credit concerns, the weak dollar, higher oil prices, all of that weighing on investors' minds, will we see a year-end rally this year? Joining us now, James Shelton, Chief Investment Officer at Canale Trust, and Craig Columbus, Chief Market Strategist at Advanced Equities Asset Management. Also joining us, Dennis Neal. I'll start with you, Craig, if I could. You think we will see a year-end rally. Why?
I think we're very oversold here, and sentiment is so negative. These are usually the type of conditions where you see a move to the upside, and so many folks are on the same side of the same trade, Sue. Sort of long bond, long euro, long yen, short dollar, and short U.S. equity, and that makes for pretty good conditions for a rally.
Jim, do you agree?
Absolutely. I think when everybody's leaning on the same side of the boat, it's time for a bit of a reversal. I think we saw a report this morning from UBS that talked about investor sentiment being as negative as it had been since Hurricane Katrina. So I think that the conditions are ripe with a little bit of better news from the holiday spending front. Could be a good spark for the market. Which,
Dennis, you brought up earlier when we started the show today.
Yeah, I thought the retail sales were looking awfully good.
Jim, you're looking globally. You're looking for the big cap names that have global exposure. We've heard that from a number of people out there, but there's also worries that the global economy is slowing a little bit. Is that a concern or no?
Well, it certainly is something to watch very carefully. But when you look at the net export numbers from the U.S. in the third quarter GDP report, very, very strong export business. So we're focusing on those multinational companies that have a lot of their sales coming from non-dollar areas. We think that's where the growth is going to be.
Jim Shelton, you're not a buyer yet at these low levels of the financial stocks, are you? The Goldmans and the Citis of the world?
No, we're not a buyer. We think that there is a lot of time that we've got to go through here before we know the full extent of those issues, and so we're avoiding the financial stocks at this point.
Both of you do not think that there's a recession coming. Jim, I'll turn to you, though. How much of that is dependent on continued accommodation by the Federal Reserve, or is it independent of that?
Well, I think the Fed moves to ease monetary policy continue to be very important, but the economy has weathered an awful lot of shocks to the system over the last several months and entered this housing and credit crisis with a tremendous amount of momentum. So I think that that's set to continue, although we're definitely going to see a slowdown here in the months ahead.
Okay. Thank you, gentlemen. And Dennis, we'll see you again in just a few minutes.